What's up, you guys? Welcome back to Stock Talk with Dr. E and David. Today we are going to look into Carmax, you guys. So that is KMX on the stock chart, the leading used car retailer in the US. Okay, and asking, hey, does it still have room to grow as an investment? That is definitely the question. Please, we are not financial advisors. This is not financial advice. All trades come at risk. And please know we're not recommending you to hold or to sell. So, David,
Yes.
what do you think about Carmax?
I don't know right now, but I can tell you right now, we're going to get into that latest on earnings, what the market condition is, and whether Carmax is a buy, hold, or pass.
Yes, that is the question.
So, a brief history: Carmax as a distributor in a used car retail, the market position, the largest used car retailer in the U.S. with nationwide footprints. A business model: the retail sales plus wholesale auctions plus auto finance.
Exactly.
Plus auto finance.
Yes. So, current financial earnings. Let's go ahead and pull up their earnings. All right, you guys. So, as you can see, here are some of the data for their earnings. It actually went down pretty bad for earnings. Definitely way more than expected. But when it comes to some of the highlights, revenue trends steady, but impacted the high interest rates. Profitability, tight margins due to the rising costs. Carmax Auto Finance segment performance, the key stat quo from the latest earnings report. And sadly, in this bear case,
yeah, because we got some bear cases out here. It's just sensitive to interest rates with the thin profit margin. Plus, you can't forget about the competition from online first distributors. Let's see some technical analysis on this, though.
Oh, yeah. As you can see just right here, that the numbers have been going continuously down. Now, regardless if it has been going down or not, actually, when we do look at the chart, it still is able to withhold the brutal earning calls that they have. So let's take a look at the chart. So let's start looking at Carmax. As you can see, and if you want to follow along, the ticker symbol is KMX. But this is their chart. What they normally do. This is the actual weekly chart. Okay. So as you can see, where it fell at, which is around $42. As you can see, normally it kind of falls around this area a lot. So if anything, it definitely did fall into a really good zone. Just because normally it always recovers from this zone. It's been recovering from the zone since, what is that, 2013?
Yeah.
So yeah, for the last 12 years, right. It's been like, nope, I don't feel like going down there.
Right.
And turning right back around. So it has very good support within this area. So yes, definitely looking at Carmax, even though they went down for earnings, and sometimes they usually actually do, it is totally okay. Why? Because it always rebounds. Here for a week, the next week it flew up. It was here for a week, the next week it went back up. So it's a very, very strong area. Even here, now this is in 2020, so this is COVID. So when it flew down during COVID, it did not want to surpass. It tried to go up the first week, came back down the second, but it didn't come down as far. So it kind of should let you know that, hey, this is a great spot for you to buy in.
That's another thing that lets you know that that's the spot, because if you can survive COVID at that spot, that lets you know that you survive. That's the type of turnaround.
That is a turnaround. Yes, exactly. So if anything, it did fall into a good area. Please put your alerts in to see how far it may fall. But just looking at, and we'll switch to the daily. Just looking at the chart, it seems as if even when it had a chance to fall back down fully, this next day, it definitely did not surpass this $42. And even if you put up the indicators, which you guys know I like my Bollinger Bands, It is so far out the Bollinger Bands. And as you know, with the Bollinger Bands, it usually stays within the Bollinger Bands within usually about 95% of the time. Yeah. So even on a weekly chart, let's see if it is definitely outside the Bollinger Bands on a weekly chart as well. So it is definitely just gone. We'll try the monthly chart. It is outside of Bollinger Bands on the monthly chart as well. So as you guys can see, it's definitely a great spot for anybody to go ahead and jump into.
Yeah, definitely keep your eye. You don't feel like it's go keep your eye.
Yes, keep your eye on it.
Set them alerts.
Yes. Please set your alerts and set your reminders. But looking at the chart and knowing what we all know, the chart never lies. So let's go ahead and look at some options that we would look into out, because anything that's considered a leap is more than 365 days out from the current date. Okay. So that would be September next year, but we're gonna go ahead and go to January. All right. Why? Because stocks have to go up in January. They just do. Actually, they do because of tax reasons. A lot of people like to sell their stocks in December, so they can report losses to the IRS. So in January, stocks normally fly back up. So we'll sell it in January. I think a good one will either be 1070. It has a 633 delta. But I really like for leaps a good 80. Let's see what this 1320 is. So looking at the chart, it's definitely going to make within a 20 to 30, a good $20 to $30 move. So you basically just go ahead and times 80. 80 times however many dollars until it gets to your break even, and then $100 after that. So you can definitely expect if it's at 44 right now, subtract 50, so that's for $6, it will give you $480, and then for, since we said anywhere between, what did it say, $25. They only have 19 more dollars to go, so 19 times 100, that is 1,900. So you already have your $480, so you just add that to the 1,900, and you have $2,380 of possibility for you to get from the stock. But also one thing you need to consider is that, hey, if you're looking for more money, then just buy more options. And just the more and more you buy, because a lot of times you wonder how a lot of these amazing stock traders are able to make millions or hundreds of thousands of dollars on these trades. It's not because they're buying and holding for years and years to come. It's because they're buying way more options, knowing that, hey, I can make a lot more money. So if I know I'm going to make 2,300 and I really want 23,000, then just buy 10 options. And then now you got yourself a $23,000 day coming up in your near future. But don't think that someone else is doing more or less. Someone is doing something magical or more on their end. They're literally just buying more options. And then when it does go down, they literally just go buy more. So definitely know that you are heading in the right direction. And that this is going to be a great play. Finally go back up to the spot that it normally likes to go to.
So tell us in the chat down there if you're bullish or bearish on KMX. We need to know. Give us your thoughts.
Please give us your thoughts. Make sure you are utilizing your journal.
Yeah.
Make sure that if you don't have one, then go ahead and go to the link in the bio. We're more than happy to make sure that you have one for your trading journey.
Yes, we have a beautiful one for you.
Yes. Make sure you also jump into our stock community where you have like-minded traders in there, just like us, who is looking for a way to achieve generational wealth.
Then please don't forget to like and subscribe.
Yes. And until next time, we appreciate you guys clicking on.
So much.
See you later.
Keep trading.
Hey, you guys, we really hope you enjoyed that last episode.
And if you're really ready to keep transforming, go ahead and jump into that next lab episode. The one right here. Down here, the link right here.
It's probably over here.
Or there, or here. Link, click. Go ahead. You got it.